let's talk a little bit about investment banking, which was kind of a soft spot for a lot of your competitors and your company as well. What do you see happening in investment banking this year? Is it going to be a better year than 2023?
Well, I think it is going to be a better year. You know, it is. We did have a good fourth quarter relative to trend, but it was a difficult year, 2023, especially in equity investment banking. You know, capital raising was down, over 70%.
Yeah.
M&A was down 50%. I mean, that was a tough year, not only for us, but across the industry. So as we look forward, because of many of the things we've been talking about on the economic front, we think that activity in our institutional investment banking will be better in 2024 than 23. That's not saying a whole lot, though, but it's definitely going to be better.
Yeah. Well, tell me about wealth management. Has been a strong part of your game for a long, long time. What percentage of total revenues does wealth management represent, as opposed to investment banking?
Well, last year, probably 65 to 70%, historically about 60%. So, you know, wealth management had a record year last year, and of course, our institutional business was down almost dramatically. So wealth management has been the foundation of Stifel's results for decades and continues such today.
All right, let's talk a little bit about why you say this year could be a transition year as opposed to any other kind of year. What does that mean for your company and for the markets generally?
Well, you know, look, I was listening with interest to your prior interview, and I think that the street, and certainly I, running an investment bank and a bank, would cheer for 5 to 6 rate cuts. And, you know, but I think that bringing out, the party hats and the kazoos, and I often agree with Steve, but on that one I really don't agree. I think that it might be a little early to be saying that inflation is conquered and rates are going to come down and we're going to do that. Hence, I think it's a transition year. Look, inflation's bottoming, but it's bottoming at 2.5 to 3%. And so what's it go when it starts trending back up? I just feel that we just had 11 straight rate increases, and to think that we flip into 2024 and we're going to have 5 to 6 rate decreases on 1 or 2 inflation numbers, especially with wages growing as strong as they are, I think is overly optimistic. Now, trust me, I'm talking my own book. I'm hoping for it. But as we advise investors, we think that sometimes you got to look at the consensus and look at the downside. And the downside is you only get maybe 2 maybe rate cuts. Remember, you got an election coming up, and I don't think you're going to see something happening right before the election. I don't think it's going to happen in March. So you're dealing in that middle part of the year. We see 3, maybe 4.